Okay, my people, irrespective of the trading you are doing, but this is for beginners. You need a trading view, okay? And in your trading view, very simple. I've told us that if you are doing your trading, maybe organized sport, organized futures, everything organized, you must have selected instrument you want to trade, okay? Like what I gave us on sport. So, and I said unorganized, you are going to be using the uh, coin aggregator. So, but let's look at the trading view. Go back to some of my videos I've done. So if I'm going to do my organized trading, either future sport or future. So let's say organized trading, and let's pick AVAS as a token that I want to trade in an organized manner. Okay. So this is a plain chart. I've told you there are two instruments I've recommended for all of us beginners. All right. The two instruments are recommended for us beginners. They were MACD and moving average. Okay, so now let's go. So you remember I talked about the first thing you need to have is the top-down analysis. So for you to do your top-down analysis, so of course, if you look at on this trading view, you see your left side is where the tools that you're going to be using for drawing are. On top are like daily indicator where you can add them. By the right is where you have watch list. All right. So if you look at it now, look at this point where my cursor is running. It's where anything you're looking for, just place your cursor on it and it's going to give you what that thing is. Now, so I close this. Why do I need watch list? Like I said, you want to just measure 5 instruments you want to be trading. Let's say Avas, Uni, Sui, Chainlink, and maybe BNB. Okay. So if that's the case, I've chosen, let's say, Link, Sui, Uni, Avas, and BNB. These are the 5 instruments, for instance, you want to face. So that means those are the 5 instruments you are going to do for both your organized sports, organized futures, and your organized sport too. You now got to have swing and scalping. I've given you a video I sent before. Now, how do I go about it? We have said if it has to do with swing, you are dealing with, daily 4 hours, 1 hour, and entering in 15 minutes. So, but this is what I do to be organized. So I'm going to pick AVAS. First thing, I want to do my, what we call what? Key levels structure. You want to structure your key levels. Okay. So now you are going to go to your chart, look at my cursor. See this object. That is the candle. You click on the candle, change it to line. Look at line, to change it to line. Now, look at this place. That's the trend line. Click on the button in the front. It gives you array. So you select what? Horizontal line. Just click it once and leave there. Now, come on top. Don't click. Just scroll your mouse. Scroll your mouse and now paste it on the highest you have here. Now you see my own is thicker. So yours will be tinier. So click on this point. Yours will be showing 1. Then you see 1, 2, 3. Pick on the 4 so that it can be thick. Go back there again. Carry it. Just click it once because it has already been selected. Now you want to go to the lowest spot here. So and paste it here. You go back again. You can see why it's organized. So I'm going to look at important point where I know market has hitting up and down. So we find one here because of this and this. At the end of the day, you're going to see the wick actually touches this place. Now you go back there, select another one, right? So let's place it. So you can see touch point. The more touch point you have, the better that key level. Then I'm going to pick another one. Let's look at this place. And we have a key level here, or rather we have here. So, but you want to see recent correlated. So which one is recent correlated? Let's look at this point, or is too close to the other one. However, it's an important area, all right? So you pick again, So let's look at this point. So let's look at this point. We have an important area here. Yes. So let's adjust this one a bit down. So capture here, and all of that. So let's go perhaps so you can see what you are doing. This is called structure. You are structuring. So let's take this one. Okay, this space, or if can be adjusted to other place. So leave it this way. Now you have done this. This is AVAS. Okay, you go back to your line, click on it, and select candles. Can you see now? You have selected candles. That makes a lot of sense, right? Very fantastic. So now let's look. You have structured this. This is an organized kind of a trade. So because these instruments are the ones you're actually trading. And I told you two instruments or indicator I want you to add are moving average and MACD. But this type of moving average, if you just want to use one, go to your indicator and look for ZEMA, Z-E-M-A. Just type ZEMA. You are going to see zero lag EMA V2 by whatever. Pick it. Then you are going to select it. Look at the ZEMA. So look at the settings button. Click on it and then go here. You will see 30 here. Change it to 200. Click on style. And then this plot, click inside of it and change this line to make it thicker. You like, you can even turn it to the highest thickness and make it to be red color. Then remove all of this label and click OK. So now the next you are going to add is your MACD. You go to your indicator again and type MACD. It will pop up moving average convergence, divergence. Then you click it. So you have two things now available here. So now, very simple. Now, for you to be trading daily and all of that, remember, we said if I come in a day, what I want to check is the candle that closed yesterday and the one that opened today. How do I know? Because you're already on daily time frame. Look at it here. So if you click here, look at it. If you want to see more, you can click this button. It shows you all of those time frame. So daily, 4 hours, 1 hour, 15 minutes, 5 minutes, and 1 minute are very important time frame. So now, look at AVAS. When you came, AVAS is between nowhere because it's below this your key level. Meanwhile, it's as if it's trying to rally up. How do you know? There was a previous candle that slammed down, and let's open it properly so that you can see it, right? Here you have, this is a doji, this is a doji, this new candle. If you look at it now, this candle is supposed to, until this candle clamp up here, you'll be relieved to an extent. But without that, that means this guy is still going to come down to $19 eventually, right? Because there are no volumes. This is MACD. I think I've taken my time to explain what MACD is all about. Now, if I go to 4 hours, what do we say we check on 4 hours? We want to see the trend of the market. Now, so let's look at it now. In 4 hours, it's already showing sign of going up. How do you know? Very simple. Look at your MACD has crossed, number one. Number two, this is a low, this is a high, this is a low. So you already had this what is called, yeah, this is a low, this is a high, this is a low, and this has been broken. So all you want is that it's supposed to go up to an extent, maybe somewhere here, and then return back, or not returning back to this point. So maybe bounce from this even 200 and then begin to go up. Then you'll be happy. By the time it break about $26, right, which is here, and retest here to go up, that's going to make a lot of sense. But without that, you could get here and be ranging. So you can see your 4 hours now. We are still in downtrend. Just manage to see as if we're going up, but we're still in downtrend. And that's where you use your 4 hours to actually check the structure. The same thing you do on 1 hour. What you cannot see properly in 4 hours, you probably may see it in your 1 hour. So the same thing you have here, we have high, we have low, and then another high, another low, another high. So this low in 1 hour that's been created now, you want it to go up and break this point. So when it break this, that eventually break above this, you are going to be happy to an extent that the market is returning. But look at it. When you come today, for instance, yesterday was 26. Today I'm talking is 27. So if you come here, you probably have seen how the market has moved and all of that. So it's on that note when you want to trade, you want to find an opportunity. Now listen, because you have done those key levels, do I actually trade from here? No, you are rather, especially in your spot, you rather want to see the market cross above this and retest, and you want to find an entry. Perhaps if you look at your MACD, so your MACD actually crosses from here, which perhaps can have lead you to enter and then taking profit, but you are invariably targeting here, right? So that's when you go back to 15 minutes. So 15 minutes give you an ample opportunity to find an entry earlier, but you are targeting and looking up. But there's something that is very important. I told you people about support and resistance strategy. So this is 15 minutes, and you are looking for, so if it's your day trading, like scalping to close, you are using 5 minutes, but your key level are still marked so that you can close your trade early, right? So look at it. Let's go here. So let's say when you come today, because this was yesterday, 26th of February, and then this when today begin. So you know you have marked all this point, and this is 200 moving average. So since the market is still above your 200 moving average, let's look for MACD2. Your MACD2, all right, yesterday move and cross 200 moving average. Look at your MACD. Your MACD cross on top of zero line, which means, and you are above 200 moving average. So if you come and the market actually came down this, move up, this is already structure. Look at it. This is a low. The market opened and went down here. This is a low, this is a high, and this is a low and another high. Can you see now? So now, for sniper entry traders, right, will have entered the moment is above 200 moving average. But you wait for this pullback. This pullback was a perfect entry for you. Now, if it is future trading, once you enter here, let's look at it. Once you enter from here, for instance, your stop loss is going to be below this low. Some have to put it this way. You know, this is 5 minutes, but better still to put it this way. Now, if you look at it, it looks so long, then you are targeting 1:2. Let's see. 1:2 is complete already. So you're targeting 1:2, which is about 2% to 4%. Now, so even if you spot, and we said targeting at least average from 4% and above. So with that, you'll have closed a trade on this. And we now said, if that is the case, you have checked this, give you an opportunity. If it's spot trading, it's easy. You check another instrument. If it's future, you have to stay put and let this one close for you to find another opportunity. Here you come now. The market on 5 minutes had done this. Haven't gotten up here. It approach here and it starts crossing down. Now see what to do. We talk about support and resistance strategy. See what happened. I'm going to go here now. See what happened here. The market got up here and stop, right? Which is a potential resistance. Do you see it? So we talk about these things so often. Now the market had come down, and what happened? Went up and failed to break this. Perhaps at the pointing of this was actually your entry. Some people want to wait for it to go below 200 moving average, but you want to just find an entry as a spot, as a future trader. You enter short here. Your stop loss should be above this, but better still above this your key level, which was there before. Now, where's your target profit? 1:2. Let's go this way, for instance. 1:2. Okay, 1:2. Can see 1:2 is already completed. That's about 1.43 for a loss to a profit of 2.85. So if you use 10x, 10 times 1.34, that is 14% plus on as a loss on your market. Then, right? Then if it's when you hit the profit, now by now you have hit the profit. And again, look at it. It pulled back again and failed. This is another fail. If it's like forex now and all of that, you are stacking more position here, right? And when you stacking more position, see, you are looking down, so far. The market is going to crash. It will crash very massively. All right. So that, but remember, this is 5 minutes. You're just capping in between. But within that period, you actually had made money. This market has been going down. That's where you could find this. If not, it may not happen that way. So when you stack here, your stop loss are above this point, and then you continue to move. That's how. Now, if you then go to check your MACD, you can see that your MACD was already divergence. That is bearish divergence. But remember, this is lower time frame, so you have to be careful the way you use whatever system on it here. So look at it. I won't go down to this point. Okay. So now the market was going up. So eventually, now we have this. So that is to say, if you are trading future, so why not say this one crosses? No, for the fact that this one crosses, but the market is below 200 moving average, and even your market structure is changing. This is a high, this is a low, this is a high, this is a low. So even if you are still over conservative, this one now have created a high and is to take out this. The only thing that will make you to say, okay, we didn't take out this now. I want to bounce. You want to see above this. But definitely, you take out this, it continues to sell. So if you are doing future or forex trading, for instance, when you open here, you open 2, 3 positions. When you take profit here, the other 2 positions are still available. Then as the market continues to go down, you are looking at all of those points. Probably look at it, which area of interest. So you are looking at this as a demand zone, for instance, right? So I just want you to get this. I want you guys to get this very simple. So that's about $21 to $20 that the market could return back to that point. So if you are trading futures, you will have shot to that point, okay? All right. If it's forex, it's the same thing you will have used. Okay. So I'm just using AVAS as an example. That is your work on a daily basis. That is your work on a daily basis. So if you look at Bitcoin, it has created similar thing, right? So look at Bitcoin. It has created similar thing. This was yesterday, and this is today. And look at Bitcoin came down, high, low. This was lower than this. It's not a good one. Come down, but you can see now that the market was not really healthy, right? I haven't done that. It has been struggling and coming down again. So that means chances are there that it can still go back to that $82,000 again. All right. Okay. Okay. So that's for, so the same thing on any other instrument. Okay. Look at gold. And remember, I told those people something. Either if it's futures, anytime the market is below 200 moving average, look for a selling opportunity. What did I say? Anytime the market is below 200 moving average, look for a selling opportunity. For instance, this is good. Now, I've said, especially when market become choppy, number one, you have checked for the day that the market bias was bearish. Okay, no problem. If it was bearish because it first went up and come down, so no problem. Since you are bearish, I will be selling. But this is, so if you go to daily time frame, look at it. Let's look at gold here. So please, I'm just doing this in combination so that we can be on the same page. Okay, you can see my key levels that was drawn. So how do you know we are bearish? Look at the candle. Still first went up for the day. All right. So sometimes I do this. As it first went up for the day, I mark the week of the day, for instance. So if straight away I come back to 15 minutes, so I'm combining everything now. Please don't get it twisted. So sometimes the markets return back to that origin and sell down. In this case now, look at it. It's so clear. It's so clear, right? So market went up first. That is what we talk about the market. My own target, what I said about the market do what is called a squeeze, like contraction, expansion, and delivery. Okay? Contraction, expansion, and delivery. Where is the contraction here? Here is the contraction, for instance, right? So here is the contraction, all right? Now here is the expansion, and here is the delivery. So once the market open, it first come down, then know that its up is actually going to, right? So look at another day here. The previous day is here. Market did what? Open and went up. That is, here was a contraction, here was expansion, and then delivery. Even though it still came back to the region, but if you look at it, it never went back to this previous one. And then the market continued to rally down. It moved massively up, and then the next was to continue to go down. So anything that make it to be below 200 moving average, you want to look for a sell. Now, for you do spot trading, when it's below 200 moving average, don't trade yet, just wait for it. So look at your MACD, look at the cross of the MACD, which give you another, okay, confirmation that, okay, we're still going down. This is why organized trading is very good, because it makes you to really build your account meticulously. And trading few instruments will help you to build your account meticulously. But if you are jumping from one instrument to another, you will not be able to track your activities, and you will just waste all your trade. Do you get it now? So it is very, very important for us to maximize, and be organized in our trade. And remember, I told us about, the support and resistance strategy. Look at when the market went up here, you mark it, and then it move up and fade. That's a sell. Then the market again is here. What we are expecting is this. Look at it here. Even though this is 15 minutes, so I've marked here now, for instance, as a what? As a support. Now the market is still struggling, right? You want to see this market actually bounce from here, but how far will it go? So that means anything fail from here will continue to sell down, and that's when you're going to go back to our higher time frame, and you could see that the pressure of the sell is very high. Then that means you are looking at this instrument to get down to 2789. It may not be today, but over some days, maybe tomorrow, as the case may be. Are you seeing it now? So this is why organized trading is very, very essential, because it will help you to organize yourself properly. Okay, so you can see, look at okay, here we have this. Okay, I think there's something we marked here. Was it on that 5 minutes? Okay, yes. We mark here that this market should come down below this point and break this. Now it's going back up. But even when it go back up, what do I do? Look at what I do again. I look at this week. Okay, even though this is 5 minutes, I mark this week, which is in consonant with 200 moving average. I want to see it fail when it gets there. And then, so when it fail, as it get there, what's this? Okay, if you fail as it gets there, then I'm looking for a selling opportunity. Just a moment. Okay, so that's how you find yourself. But one of the things, and I can tell us from experience, organized trade is better off than unorganized trade. Yeah, unorganized trade, sometimes you can make a lot of money, but chances of retaining those money are very narrow. And what do you mean by unorganized trade? For instance, for crypto, what's an unorganized trade? I have showed example to us in an unorganized trade. So if I go into Coin Market Cap or CoinGecko, see what I now want to do. There's some time that unorganized trade actually pay. It's only when you cannot find a trade again. You are just looking for an entry of a market at all costs, right? So what to do is that if I go to CoinGecko, for instance, so what am I going to do? I'm going to go to CoinGecko and go to the cryptocurrencies, all right? To get into the cryptocurrency is very simple. I will go to 7 days and short it this way. Okay. And short it this way. So shorting it this way, I'm looking for coins that had moved very massive up or down for the past 7 days. So look at Mantle, look at Trump. Okay. So Trump has moved up. This has moved up. So I can say, okay, let me now look at Trump. Let me look at Mantle. Let me look at Tau. So let's go to our trading view, right? Let's go to our trading view. So this now you don't have structure for it. So what do we first say? Trump. Let's look at Trump. Okay. You didn't draw any structure for this guy now. Okay, so your MACD is already set there and all of that. So at the time you can, right? So as at the time you can, so this is what you are having on Trump. Okay. So what do I want to do? I want to look at Trump. Can I buy? Obviously, I cannot buy. So I have to now mark to check if opportunity to sell Trump here. Remember, this is a downtrend, right? So opportunity to sell Trump here. So when any opportunity presents itself, even though this is here, I will now want to sell because this has actually moved. For people who were coming, they will have bought and then maybe take profit, which was okay from about 12 point something dollars, right? Okay, this is actually 5 minutes. So probably you want to check it properly before. Okay, so let's look at 1 hour. Okay, it's still a downtrend. You can agree with me. Just that it's flat. So if it's flat, it's not showing any momentum. I don't need to waste my time on it. Though it's approaching where you are looking at, okay, this market should be finding a breakout of the region it was. And then remember, we said it has been selling more than others. So you want to find an entry on it, either to buy and all of that. So that's a kind of what do we call the trade? We say it's an unorganized trade. It's an unorganized trade. Unorganized does not have two names. That is not organized, not organized. Okay. And those trade actually waste our, okay, it wastes our time, it wastes our money, right? It wastes a lot of things and it wastes our account. Okay. It wastes our money, it wastes our time, it wastes our account, right? It wastes our what will I call it? Psychology. Because you'll be tired, you'll be bored. Entering wrong trade all the time is not good. So you have to organize yourself. Okay, so now this is it, and that's what it is for. So now let's go to the AVAS we're checking, right? So here is AVAS. We're on 5 minutes. So as for me on AVAS, you are a spot trader, you have taken profit for the day, and then you're only waiting. Are there any other additional new opportunity for me? So the market have to retrace to a reasonable level for me to find another entry. So if you look at your MACD, so if you look at your MACD, to look at your MACD, you will see that it's still down, but about to say, I want to cross up. What should I do here? Nothing. I will just be waiting to find a proper entry. This is applicable to all instruments. It doesn't really matter which instrument is that and all of that. So we cannot find, so I want to exemplify trading on this. So which coin do we trade? Yeah, so which coin do we trade? We couldn't even find any coin with good momentum and all of that. But I'm going to go into the exchange platform for you to see how you now find an entry into the market. Okay, so let me quickly log in to an exchange platform. But please organize yourself when it has to do with trading. Yeah, don't jump around, right? So don't jump around. Jumping around will distract you and will not allow you to have reasonable results. it actually affects your stability, your psychology, and at the same time, your result. I'm speaking from experience.
Recording in progress.
Okay, so let me share with us now so that we see how you are now taking trade. So let's quickly go to trade. So I share my screen with you. So this is an exchange, for instance. So let me go to my home. Sorry. Oh, I want to use another exchange. BitGet. I want to use BitGet. Okay, so here is BitGet. Okay, so then we go to, irrespective of where you are using, so we'll go to trade, or first go to market so that you can even see what you're selecting from the market, okay? You're going to look at what am I selecting from the market, okay? So, we get their internal token, right? Quite unfortunate, Fazin mean when we look at AVAS and select it, then we could trade it. All right, so let's look at virtuals. I think I bought this virtual. Oh, look at virtuals now. So look at virtuals. Now, I'm sure you see some indicators added here, which is good for you, even if you don't go to your trading view, but it's still good you have your trading view. Now, if you look at virtuals, look at it. So first, virtuals have created high here. So virtuals have created high here, on top here. Okay, so now, if it has created that high there, so then market, you expect the market return back there. You see your MACD here. Please, this is a simple thing. I don't want us to get it complicated. So your MACD actually cross down here. Okay? And then you have the previous resistance up there, which is here. Right? Now the market actually returned to that point. And what happened? Could not cross. So for people who are doing future trading, you are shorting the market from that point. Right? And because even your MACD has crossed, number two, your moving averages have crossed and all of that. Even without that, with price action, it has shown that I'm going down. So your target is going to be down here. So by now, you're already out of the market. Even if the market is still doing what it's doing, you're already out of the market. That's for people who trade futures. Now, you that trade spot, what should you do? Wait, don't do anything. Wait until the market collapse entirely. Then you can now say you want to do something. Because if you look at it, let's go to daily time frame. So look at the daily time frame. The guy is still is at the bottom though, but he's still dialing. He has not broken out. For you to see that this guy have broken out, so you want to see above this point. So by the time the market break above this point, the test like this, then you are going to see market going up. But nevertheless, upon is at the bottom now. For people who are trading futures, even your spot trading, you will have been finding an entry if you are looking at it inwardly. Look at on 4 hours. That's the market that on 1 hour was chopping down. Look at 4 hours. Somebody who have bought virtuals at 93 cents, all right, at 93 cents, and then actually sell. Look at it to this point. And now it crashed again, and then he has bought already. So if you do that, you are going to find another entry. But right now, the market is crashing. Perhaps the market may crash down again to this point. So what do I do when the market is crashing? You have sold, you have taken your profit. Relax. Wait for the market to finally. So if you look at this market, you are looking at this point, which is around $1 or less than $1 down there. So for you to find an entry. And that's exactly what is happening right now. If you use your 5 minutes, let's look at 5 minutes. So you will have seen, well, if you are trading futures and so to see the structure properly, then especially a coin that do not have much volume, 15 minutes is okay for you. So this is how, so now we cannot find a trade. So let's go back to our market so that we can see Bitcoin. Okay. You don't just jump at the market without doing your survey. Which coin is this? It may be a meme coin. So I need to just experiment. Zoo. Okay, I need to just experiment for us so that it won't be just a talk. I want to find a coin breaking out. Okay, opening soon. Which coin is this? Mem hash. This is going to open in trading the next 16 hours. Okay, this 16 hours. So we can't depend on that one now. Okay, let me just use example to buy this their token. I'm not supposed to be buying anyway. So now, how do we now buy? So we now go to trade and see this point. This point shows market. So inside of it is where you are clicking to either say limit order. When you put on limit order, you can put your own price. But if it's on market order, you are buying instantly with the prevailing market price. So assuming I want to buy now, what do? I put the market order. Then I go here and put the amount of USDT I actually want to spend. So let's say I want to buy worth of $20 because I'm not doing any analysis here. So I click on buy because I put in market price. Instantly, it's going to buy for me. Can you see that? So instantly, as it bought for me, what do I do? So I perhaps say, okay, the market is going to go up, BGD, right? Let's look at it. BGD. So it's showing that I've bought already. So let me look at 1 hour time frame or 4 hour time frame if it's for swing. So BGD, if I look at it, say, okay, perhaps maybe go up to $4.5. Okay, $4.5. So what do? I come here and click on sell, but not market price. I put limit order. Okay. So as I put limit order, very simple. And then I'm going to put the price. Look at the price. I remove this and I say $4.5. Okay. And I put all. Or if I want to be selling it in batches, I first say 50%. For instance, this is 50%, right? And I click sell. Then confirm. Then next I do, maybe I want to put the remaining one at the price of $5.2 or $5.5. Then I tap on the 100%. Then I click on sell. Then I confirm. That's all. That's all. So all you do is just to monitor to know what's happening about the market and you have no problem at all. So this is spot and it's very, very simple. So you can see how you go to market, you can see the analysis by yourself, right? See the analysis by yourself. So I told you, where should I be buying coin? When it's down. When should I be selling? When it's up. So why will I be buying coin when it's up? Just because people are talking about it does not push you to start buying irrationally. All right? This should help you a lot. So I have to take my time to explain all of this so that you can maximize your trade. Thank you. God bless you. Have a nice day.